the next secular trend and how investors can take advantage of it. We're here with Martin Pring, and he's going to explain what the next secular trend is and what he sees the best way for investors to take advantage, as well as where we go from there, actually.
Well, currently we're in markets. When you look at bond stocks and commodities, they're always in some form of secular trend, where it's a secular uptrend or a secular downtrend. And what I mean by secular trend, I mean a trend that embraces several different business cycles, typically lasts about 15 to 20 years. So right now, as of 2000, we've started a secular bear trend in stocks. The average secular bear market lasts for 18 and a half years. In Japan, of course, it's been going on for 20 years plus. So 15 to 20 years is a good benchmark for that. We're in a secular bear market for stocks. We've been in a secular bull market for commodities since 2001, and the average commodity secular bull market is 23 years. So that means we've probably got another 10 or so years to go for the secular bull market in commodities. And the two go together. When you have a secular bull market in commodities, typically you have a secular bear market in stocks. And then with bonds, we've been in a secular bear market for an incredibly long period, about 31 years. So it's very much time for the bond market to start to revert and for us to get a rise in interest rates beginning probably in 3 or 4 or 5 years' time, just as we had one in the post-war period.
And that would fall hand in glove with people talking about the rising inflation coming soon, and because of the flight to the dollar. And
yeah, well, historically, when you've seen a low in commodity prices, you've seen a low in bond prices, or high in bond prices, or a low in yields, separated by probably 5, 6, 7 years. And if you take the low in commodity prices as 2001, and maybe the secular bear market in the bonds ended in 2008, maybe it hasn't quite ended yet, but there you're at an inflection point where we could see a secular bull market in bonds, which will secular bear market in bonds, secular bull market in yields, which will add another headwind on top of the secular bear market in stocks, for investors, that is.
And your new book, you talk about another lost decade.
Correct.
For investors. What do you mean by that?
Well, we had the first lost decade where stocks lost in real value. And we think, my partners and I who wrote the book, think that there's going to be another decade, or at least half a decade, of losing stock prices in terms of inflation-adjusted prices. People seem to forget that we shouldn't be looking at nominal prices. We should be looking at inflation-adjusted prices. Because I can buy a stock for $10, sell it for $20, I've doubled my money. But if inflation has also doubled, I've actually lost money, because I'm going to have to pay capital gains on that so-called gain.
Right, right. That's fascinating. Well, thank you very much for being here.
Thank you.
And thank you for watching the MoneyShow.com video network.